Hello friends, this is your host Rakesh Kumar. In the previous video we had seen the chart pattern falling wedge, and that was a theoretical example of the falling wedge in which we had discussed this chart pattern as a reversal pattern. And in this video we are going to see a few live examples from the real market, and we will see how this pattern can be traded and how actually it behaved in the past and how we can trade it. Just to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now to get notifications of the latest video uploads. And if you find this video useful for you, then please press the like button that is below the video.
But before we begin, let us have a look at the risk disclaimer.
It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started. To start with, we have this falling wedge, an ideal falling wedge which is having lower lows and lower highs in the formation. Now if you remember from the last video, what we needed was high, and also we needed lows, then we have a lower low, then we have another lower low, like this. Okay, we have lower highs and lower lows. Now there is some peculiar thing in these lower highs and lower lows, is that they are contracting, they are going towards each other, and eventually at a place here they actually meet each other. Now this is taking a shape of a cone. So a wedge is also known as a cone. Okay, so this is essentially a falling wedge. This is what we are studying it as a reversal pattern. We have studied that the price tends to contract and then eventually break on the higher side and makes a reaction high, but we don't buy at the breakout, but we wait for the breakout and retest of this previous falling resistance to act as a support after breakout. We buy here with the target equal to the height of the pattern. Now let us see how it unfolds in the real market. I have taken out one example from the Euro JPY chart. Let us see if it, of course it will not be a textbook example, but we will try to match it with that. So this is high here. I will try and make them. So this is a high here, then we have a lower high, you can also put it in this form so that you can also get this high again here, and this is even a lower high. So now you have high, lower high and even lower high. Then after you had a low here, then you had a lower low here, and then you had lower low here. So this is how they are forming. I just wanted to highlight this lower low. This is not a lower low, this was a false breakout to the downside. Okay, this can be taken as a low, this can also be taken as a low. So the price was making lower highs and lower lows like we discussed here, and then we needed a breakout. Well, let us see if we got a breakout here. Oh well, we got a breakout here on the daily chart after 2 days of consolidation at the resistance line, and the breakout happened on 2nd of June, and it closed almost a Marubozu. Marubozu is a candlestick which has significantly low or almost no wicks on the upside and the downside. So this was a very bullish candlestick, single candlestick pattern, very bullish candlestick. And you see what happened, the price went for 5 consecutive days to the upside, then eventually came down to retest this broken resistance line as a support. So this was a time where we had to open a buy position. If you remember, we had discussed that after a breakout, when the price turns back to retest this broken resistance as a support, then we have to open a buy position with a small stop loss below this wedge pattern. In this case, it could have been below this one, okay, the previous low. And where is the target? The target will be at this high. Okay, your stop loss being approximately this is a very safe trade, approximately 525 points, and your target being approximately 1376 points. It is nice, more than 2.5 risk to reward ratio. So very good trade indeed. And also, once you break higher than this level here, this reaction high, you can always bring your stop losses higher in order to save your trade from giving you some losses or to manage your trade. Now the second example I wanted to show you, that is there in the euro versus US dollar. If you remember, just now we had seen, I'll not mark, I'll just mark them now, not write them, it takes a lot of time. See, there was a high here, okay, and there was a low here, and after that, whatever the low is forming, it is contracting to the upside. These are the lower lows. Notice that this is a weekly chart, so it takes a lot of time for this pattern to form. It takes a lot of time. And after this was a high here, okay, and this high is also significant, but it is very close. If you remember in the support and the resistance lines video, the support and resistance lines are made by joining the highs and lows, but the highs which are very close to each other are not significant. But if you see this on the daily chart, it is very far, okay, they are very far after almost 1 month, but on the weekly candle they are very close. So this is still significant, but on the daily chart. And if you want, you can mark them now, this high here and this high here. Okay, so the price was contracting, and finally eventually broke out of this pattern, then came down to test this as support, again went out, again came down. Well, this was a false break on the downside also. After breakout, the price went to break down to the false went for the false breakout to the downside, and then eventually came up. So it is still a valid breakout to the upside, because the price has not gone below this falling support line. Now still we have the target on the upside equal to 1.2446 in this trade, but we need to clear first this high which is there on the way. Once this high, that was the reaction high, is taken out, that means there are still buyers left in the market who are ready to bid for the price. Okay, once we clear this resistance, then the price is definite to go and test 1.2446 levels in the coming days. So that's all folks for the falling wedge, and in the next video we'll try and give you some glimpse of the rising wedge. It is almost identical to this pattern but in the inverse, and I am bound to make a video on that because that is a very interesting pattern just like this one, and we'll fetch you some more examples in the next video in that on the rising wedge. And to conclude this video, I just want to tell you that please bear in mind, I cannot stress it more, that opening the trades are much easier than managing them. And I also request you that you learn proper risk management techniques before entering any trade. And the last piece of advice from me is that never put more than 1% of your capital at risk on a single trade, and open the position only if you have a solid risk to reward ratio of 1:3 at least. If you don't find that 1:3 risk to reward ratio is not there, then you don't open that trade. The trades will come later. Okay, wait for the trading opportunities. The market is not going to stop today or tomorrow. It will last for years to come. So wait for the correct trade and then only execute. That's all folks. Thank you very much. Have a good time. See you in the next video. Thank you for watching.